Ever get that feeling where your savings account balance goes up every month, but your life still feels stuck? Like you're hitting your numbers, but the money seems to disappear faster than ever. It's a simple question, but it bites. If saving is supposed to be safe, why are the people who save the most the ones who stay trapped in the paycheck-to-paycheck grind? I'm going to be straight with you. No corporate bank BS, no glossy brochures. I need you to understand one thing from the jump. Keeping money in a bank isn't a sin, but making it your only strategy is a massive mistake. It's a quiet mistake. It doesn't scream. It just slowly erodes the value of your hard work. You aren't going bankrupt today, but every single month you are losing purchasing power, and almost nobody notices until it's too late. We've been fed this doctrine for generations. Work hard, save your money, stay safe. Our parents said it, our teachers said it, and the bank commercials scream it. The problem? The world changed, but our brains are still forced to live in the 1990s. Prices are up, insurance is up, groceries are insane, but we're told to let our cash sit pretty in a savings account. This video isn't about being anti-bank, and it's not about some reckless crypto gamble. This is about opening your eyes to how money actually works in the real world. The world of rent hikes, car payments, and $5 eggs. Not the textbook version written by some guy who's never worried about his electric bill being late. Today, I'm breaking down why your savings are evaporating without you ever touching them. Why that sense of security is a total lie if you don't understand the system. And the realistic steps a regular person can take without a massive bankroll or elite jargon. If you feel like you've been sprinting just to stay in the same place, this isn't entertainment. This is a wake-up call. The biggest problem for the average person isn't laziness, it's the money DNA we inherited. Since we were kids, the rule was, if you have money, hide it. Don't take risks. Safety first. Sounds wise, right? But in the real world, safety usually just means standing still while the rest of the world laps you. Psychologically, a bank balance gives you a false sense of peace. The numbers don't go down, so your heart feels fine. Meanwhile, behind the scenes, the cost of a roof over your head is creeping up. Tuition is climbing. Gas is volatile. Your money hasn't disappeared, but its ability to buy you a life is shrinking. Let's talk about the system. A bank isn't a charity. They live by moving your money. They take your cash, lend it out, put it to work, and make a killing. You get a fraction of a percent in interest, they get the margin. The bank isn't evil, it's just that the system wasn't designed to make you wealthy. It was designed to keep you as a quiet, compliant spectator. Even your social circle reinforces this. Your friends say, at least you have a cushion. Your family says, stay safe. But safe from what? Safe from going broke today, maybe, but you're becoming at risk for poverty tomorrow. It's a collective trap that everyone thinks is normal. You have to understand how money works on the ground. Forget the inflation theory in economics books. Look at the guy who owns the local hardware store. He's constantly rotating his stock to survive. Meanwhile, the diligent saver at the 9-to-5 is gasping for air. Money is a living thing. If you force it to sit still for too long, it dies. If you think a savings account is the finish line and not just a temporary tool, you're playing a game where you didn't write the rules. And as long as you don't realize that, the system wins without ever having to touch you. Let's get into the core of it. Why is that money you saved so neatly actually disappearing? Think of your money like a bag of grain. If you put it in a dry, safe warehouse, it won't rot and the rats won't eat it. But out in the market, the price of bread is doubling. Your grain hasn't changed, but what you can trade it for has. That's a savings account. It's dead money. It's not working. Inflation is like a tiny, invisible leak in a bucket. You don't see it today, but in 2 years, the bucket is half empty. The banks give you interest, but it's just enough to keep you calm, not enough to beat the rising cost of living. If your money grows by 2%, but your life gets 8% more expensive, you're actually moving backward. A lot of people think safety means the nominal number doesn't drop. Wrong. True safety is maintaining your purchasing power. If your savings can buy a used car today, but in 5 years it can only cover the down payment, you didn't stay safe. you regressed. Even worse, dead money creates a dead mindset. We become afraid to move, afraid to try, afraid to pivot. But regular people don't have the luxury of time. We can't wait 15 years hoping this system takes pity on us. Logically, savings aren't the enemy, but if you make them your permanent home, they become a graveyard for your value. Savings should be a parking lot, not a house. It's a place to stop before you put that money back to work. If you don't get that logic, no strategy is going to save you.
Now, why is everyone told to do the same thing? Because saving is treated like a holy ritual. If you don't do it, you're reckless. But in the world of money, when everyone is doing the exact same thing, it's usually a dead end, not an exit.
The biggest illusion is the convenience. You can check your balance on your phone, get notifications. Our brains love that. It makes us feel like our financial job is done, but it hasn't even started.
Let's bust 3 myths. Myth 1, the most important thing is not losing the money. No, the most important thing is not losing the value. Myth 2, the interest will cover inflation. Almost never happens for a regular savings account. Myth 3, just be patient. Patience without a strategy isn't wisdom, it's surrender.
There's a tragic irony here. We're told to save, but we're also bombarded with ads telling us to consume. Save your money, but also check out this 0% APR financing on a new truck. The system wants your money still, and you're spending fast. It's by design. The system loves people with passive money because passive money is predictable. It's easy to tax, easy to fee, and easy to erode. The moment you start moving your money, you become difficult. I'm not telling you to go out and gamble. I'm telling you that the safest strategy is actually the most dangerous one long term. The biggest risk isn't losing a chunk of change, it's staying stagnant for the rest of your life. If you're feeling uncomfortable right now, good. That's your brain waking up. You have 2 choices. Go back to the old illusion or take the wheel. So, what do you actually do? No fluff, just street-level strategy. Step 1. Treat savings as a transit hub. The moment you get paid, don't just park it. Have a plan. Step 2. Separate survival money from growth money. Survival money, rent, food, bills, stays in the bank. It needs to be liquid. But your growth money, even if it's just $50, needs to be separated. People fail because they mix everything into one pot, and that pot always gets eaten by life. Step 3. Force your money to have a job. Don't wait until you have enough to invest. Small money needs to be the most active. Whether it's buying a tool to increase your income, a certification, or a small side inventory, move it. This isn't Wall Street. This is Main Street. When your money starts moving, your confidence changes. You aren't just waiting for the end of the month with anxiety. You have a system. Poverty isn't just about a lack of cash. It's about a lack of agency. When you take control of even a tiny amount of capital, you level up. There will be temptations. People will talk. You'll be tired. Use street smarts. Don't tell everyone your plan. The people around you will try to pull you back into the comfort zone. Use systems, not willpower. Automate your transfers. Don't try to get rich quick. Try to stay unkillable. The survivors aren't the ones who jumped the highest. They're the ones who kept moving. The bank is a tool, not a temple. Savings are a pit stop, not a destination. You take the wheel. If you look at your bank account tonight, ask yourself, is this money just sitting there waiting to die, or is it working? Drop a comment and tell me one small move you're making this week. Not for me, for you. Because in a world that's getting harder, the ones who survive aren't the smartest. They're the ones who woke up and took control. I'll see you in the next one.